Welcome to the Planet MicroCap Showcase Virtual 2022. I'm your host, Robert Kraft, and thank you for joining us. Now presenting at our event is the team from LiveWorld. It's a publicly traded company. The symbol is LVWD. From the LiveWorld team presenting, we have Chairman and CEO Peter Friedman, as well as CFO David Houston. With that, gentlemen, take it away.
Well, thank you. We're glad to be here. Before we do anything else, we're going to take a quick look at our safe harbor statement, which people are used to, but we need to show you that. And then, as just said, I'm Peter Friedman. I'm the founder, chairman, and CEO of LiveWorld. And here's David Houston, our chief financial officer. And we'd like to start by giving you an overview of what our business is. LiveWorld is a digital marketing agency specializing in social media and software technology solutions. The focus of what we do is emotional connections that build customer brand relationships and how those meet very specific client business objectives in marketing, customer support, and healthcare outcomes. To give you a kind of a long view, we think that more than anything else, LiveWorld's day-to-day value and long-term value and the strengths by which we manage the company are reflected in the longevity of our top brand client relationships. Over 14 years with American Express, 10 years with each of Pfizer and Zoetis, 6 or 7 years with Bristol Myers, FedEx, and AbbVie. Today, we work on 70 different brands across 20 corporate clients.
Our business model is very much focused on value. We create enough value for our clients that they're willing to pay us more than it costs us to actually do the work. That may seem very obvious and basic to a business model, but if you look across the digital social landscape, there aren't too many companies that can say they're doing this. It starts with high gross margin, consistent with the value solutions we provide. Also scale, particularly in our moderation services and our software. Our revenue mostly consists of annuity streams, annual and repeating moderation contracts, and SaaS software licenses. Even our digital agency strategy and creative work is mostly ongoing retainer work, which repeats year to year, not just one-off projects. Our agency work creates a strategic relationship with our client. This in turn pulls along the even higher gross margin and more annuity-like moderation and software revenue. Over the last few years, we've decided to focus on a vertical market, specifically healthcare. This combined with our unique solution set has propelled our growth, with healthcare now comprising approximately 88% of our total revenues. Currently, we work with the top pharmaceutical companies and a major pharmacy chain. We're extending this strength into secondary healthcare markets, hospitals. Here we're working with Mount Sinai Medical System and Mass General, two of the largest and most innovative hospitals in the United States. We believe that additional work with our current clients and adding new clients in pharma and hospitals can support our growth for the years to come. Then we see the opportunity in additional healthcare segments such as medical devices, and then taking it out to a larger segment such as financial services.
Our growth in the last several years has really been driven by our vertical focus on healthcare and expanding to a full services digital agency. That's helped us get new clients and leverage our existing client relationships to expand our revenue with them.
Before we get into the top line financials of the company, I'd recommend everyone go to the LiveWorld IR page and download our reports. We go into more detail in the Q's and K's there. LVWD, that's our ticker symbol, and I hope you get to know it. We are compliant with the SEC, so we are freely tradable. We see that the top line revenue grew approximately 16 and 18% over the last 2 fiscal years. We've seen growth in all of our solution areas, creative agency, moderation, and software. Turns out being at the intersection of digital, social, and healthcare is a strong position for us. And as we grow, we will look to extend further into healthcare and later into other vertical markets. Looking at the overall P&L, we can see that we've grown. While we've grown, we've been able to keep our operating expenses in line. This resulted in improved operating income of 5% and 8% in 2020 and 2021, respectively. We've made material improvements in our cash position from approximately $730,000 at the end of 2019 to almost $3.6 million at the end of 2021. I currently expect to see continued profits for 2022 and into 2023. Now, for the 9 months ended September 30th, we saw our revenues come in at approximately $8 million as compared to 7.4 for the previous year, or 7 to 8% growth. Our net income is roughly the same as 2021 at $514,000, even as we've invested in our development, sales, and marketing efforts. Our annuity revenues grew slightly from 2019 to 2020, and then we saw it grow approximately 17% from 2020 to 2021. You'll notice that as a percentage of revenue, there's a small drop in 2020 as a result of our creative services coming online. But right now we're running at about 72% of our total revenues of being annuity. Here's a look at our most recent balance sheet. Our cash is flat while our AR grew from approximately 1.8 million at the end of 2021 to approximately 2.2 million at the end of September. We have no debt. We have no long-term liabilities, just payables, accrued employee liabilities, and deferred revenue. You'll notice in the first 9 months of 2022, we had an increase in our asset base of approximately $496,000 while reducing our liabilities, which resulted in our owner's equity increasing to $640,000, or 21% in the first 9 months of the year. Again, for more information, I recommend you go to our website and download our detailed reports.
Having gone over the financials, let's take a look at the actual solutions we provide. We have an integrated model consisting of 3 elements, which each stand alone and they're good value, but when you combine them, it's even more value. These are creative, moderation, and technology. That we have all 3 of these and we can integrate them is very, very unique in our business. More so when you combine it with our depth of knowledge in healthcare. We'll take a look at each one, starting with creative. Creative, the way to think about that is that's the digital agency creating campaigns, digital marketing campaigns that are the inspirational call to action for customers for the brand. We do creative and concept, plan and manage, advertising campaigns on digital and social media. Also, this is where we come close to the client on their business objectives and strategy, which creates the context for everything that we do. It also drives the foundation for the other parts. The next part's moderation. Here, our live agents, supported by technology, protect the brand by reviewing and removing problem content in social media. They also proactively engage users, thus activating the all-important human touch and feel. With creative as the foundation, moderation is the part that actually activates the conversations, which then in turn build the relationships in the context of which you can achieve business objectives. They stimulate and guide users to create content too, and we get a lot of insight here and ideas that informs the creative and strategy and even the technology. Very important to understand is that moderation is essentially a recurring annuity revenue stream. And a very, very important part of moderation is what we call adverse events moderation. This is a fundamental must-have for pharmaceutical companies. They simply cannot operate in social media without it. This is because they live in a regulatory environment set by the Food and Drug Administration, which requires by law, and that's the start of the law right on the screen, that all adverse events they come across are tracked and reported. So what's an adverse event, you ask? Well, that's when somebody has a problem using the drug, or they're using it in a way that we call off-label or counter to the instructions, like mixing it with another drug or something like that. And whenever this happens, and there's a bunch of other kinds, a comment like that on the brand's Facebook page, or in a response to an Instagram ad, or a comment on their Twitter stream, the company has to have that marked, tracked, and then escalated through the company to the FDA, in some cases in 24 hours or less. If the company doesn't do this, and the FDA sends them a letter or gives them a phone call, all heads snap up, the executive staff's right on it, because that situation could quickly lead to the complete shutdown of a multi-billion or multi-tens of billions of dollars of drug business. So they have to have it, and we're the ones that do it. That brings us to the technology. The technology has several parts. It enriches these connections and enables us to scale the customer experience. First, we have a licensable SaaS software platform that's optimized, like the best one, for moderation and conversational engagement. And that's an annuity stream. We license that to customers, and then we use it for them, or we license to some of our largest customers who use it with their own people. Second, we build apps and bots to be part of the digital marketing campaigns that the creative does, making them more richer and more interactive. We also do that with a platform leverage model. And then we also use this technology to collect and analyze data, which further informs the creative, the strategy, and the moderation. So all three of these, creative, moderation, and technology, while they stand on their own, they all make the other ones better. Even if we're not doing them all for one client, our ability to do them informs what we're doing for that client. Next, let's look at how the revenue actually grows. Typically, it starts with a smaller set of revenue that could be creative or moderation or a tech license or project. And it's in the $25,000 to $250,000 a year level. Sometimes we start as the digital agency of record, and that could be a few $100,000 to like $700,000 or $800,000 a year, out the door. Whatever solution we sell in, we then can drag along and upsell the other parts. For example, we had a creative agency RFP and we won. That was great. And as part of it, they knew they had some moderation, but they didn't really understand it fully till we talked to them and we explained it to them. That understanding of moderation, why they needed more, helped us win. It was very differentiating. None of the other agencies even talked about it. It also not only let us win, but it took that project from a start of $200,000 to $300,000 a year. So both differentiation and incremental revenue. Then, as we do well with a client, we grow the different parts of the business. Maybe it's they add more social media pages and we moderate those, or more tech SaaS software licensees, or the creative campaign does well and they want to make it bigger. And that can grow the business with one client from starting at tens of thousands to hundreds of thousands, or all the way up to over $1 million a year. Then once we're into a big corporation, which is what most of our clients are, we then start going to other parts, other product lines, the corporate division, whole other divisions. And each of those, we have an MSA in place, we got references for the first one. Each of those can add 150, 200,000 to over $1 million a year per brand. And with that, a single corporation can grow from tens to a few $100,000 to many hundreds of thousands or even millions of dollars a year across the brands we do for that one corporation. Now we'd like to switch to some market opportunities and dynamics. These days, we're getting a lot of questions about some big things in the news. So I thought I would just speak right to those. The first one is, what about potential recession? Are you concerned about that? Is that impacting your budgets? Today, we are not seeing an effect on our clients' digital and social marketing budgets due to this subject. Not now in 2022, nor their budgets for 2023 as we go in. Even some clients who have publicly announced, they have cost reductions, things like that, it's not affecting the work we do for them, at least not at this point. Of course, it's a future nobody can predict, but we find that even in a recession, people need their healthcare, and that's our primary market. Also, digital and social media marketing are projected to go up even in downturns. And what tends to happen is, really bright companies tend to increase their marketing in the downturn, but most start cutting budgets. But when they cut them, they tend to cut traditional media, TV, print, and that, and actually allocate more to digital and social because it's more cost efficient and more effective, and they should be doing it anyway. And the economic downturn puts more pressure on them to do what they should have been doing. So generally speaking, we have not seen a negative effect, and we don't want to say we're recession proof, but we tend to be recession resistant. The next question I get is, what about Facebook? Are their revenues down, their stock price is tanking, and what's going on here? Well, there's a little bit more to this than you see in the headlines. First, what's going on? The reason they're having these declines has to do with targeting. Apple has changed their privacy rules to protect people, and Google Android's to come. And between those two things, the general political pressure, Facebook and other companies have cut back on their micro-targeting capability based on all the data they collect. And Facebook was the king of all targeting at a level that's never been seen before in the world of marketing. And it's one of the reasons they grew so big. And that's been handicapped. And there's been kind of a knee-jerk reaction by advertisers pulling back. But first off, when they pull back, they don't go away. They shift the money to another social network like TikTok, which we do programs for them on. So even with Facebook going down, that doesn't mean the marketing budgets of social and digital media are going down. They also sometimes switch it to Instagram, which is owned by Meta, the same company that owns Facebook. And Facebook is still the largest social network. TikTok's getting pretty big, and the rest of them are quite a bit smaller. So for all the noise about this, Meta's market share of digital ad spend is projected by analysts to only go down by less than 5%. Now, they don't like that, but it's not the whole thing's going away. It's also to understand that on this targeting issue, it's actually going to affect all digital and social media over the next couple of years because the privacy measures are being taken by Google on search and programmatic, and everybody's got to deal with it. Well, what does that mean? Every one of these companies and agencies like us are coming up with different models for targeting because that's like a central thing in advertising, all media, and we're coming up with different ways. Also, this means a brand can't just flip the automatic switch on the way they do it now and be done. They actually have to do richer, deeper programs that build relationships with emotional connections, and that's our specialty. So a lot of these companies are finding they have to turn more to their agencies now, not less. So we actually see some opportunity in it. And that brings us to, last but not least, Twitter and Elon Musk. A lot of questions about that chaos. But for all the behavior, all Musk's volatile behavior, and all the changes and issues and risks, the bottom line is Twitter still has about 200 million users. It's actually not a very big social network. I mean, these other guys have, billion, 2 billion, 3 billion. So first thing to know is, if that went away completely, that's not going to have a catastrophic effect on the brands or agencies like us. It's going to have some effect, but generally the brands are going to move their budgets to other social networks, which we do work on. But it's not likely to go away like that because it still has those 200 million users, and those users are expecting the brands to interact with them there and provide customer service. Actually, what we found is this whole chaos has raised the attention on the need for moderation, content moderation, one of our core businesses. And when you're on Twitter, as an example, you moderate your own presence. That's what we do for brands. So we're actually getting more interest and attention because content moderation has become a bigger topic. So again, while it's chaotic and we prefer it not to be this way, and Twitter's future over the long term isn't clear, it's actually turned into an opportunity for us. And with that, let's take a look at our actual business and healthcare.
So here's a look at the actual marketing spend of healthcare companies, and it's rather impressive, actually. In 2019, the marketing spend across the healthcare sector was approximately $30 billion. In that year, pharmaceuticals marketing spend was about $13.2 billion, and hospital marketing spend was about $14 billion. So there's a massive opportunity here for us within this market space for us.
As David says, healthcare is a huge market opportunity. In my 36 years of social media and digital marketing experience, I've seen healthcare consistently be one of the largest social media usage patterns. And there's a particular reason why. There's a unique affinity between healthcare and social media, in part because people, whether you're the patient, a family member, caregiver, or doctor, want to know what other people like them, other patients like me, other doctors treating this disease, what are they experiencing? What can they learn from that? In part because it's very complex information that's a lot and changing all the time. And human beings like to filter that through other human beings. And social media addresses these elements. Social media actually grew during the pandemic. On average, the use of social media by adults jumped up 5%. And then in healthcare, two notable things is conversations around COVID jumped 1,000% among healthcare providers or doctors and 2,500% among consumers. But it's not just COVID. Even doctors were already, 81% of them, already on social media, not for personal reasons, but for professional reasons. So what we have is the patients en masse have moved to social media. The doctors have moved to social media, but the pharma and hospital and other healthcare companies haven't caught up. There's a gap, and we come in and we help them fill that gap. That's core about our opportunity. And we're doing pretty good. We have a strong position in healthcare. Today, we manage over 300 healthcare social media properties across all these brands, and we deliver over 90,000 hours a year of healthcare moderation and engagement.
Looking at our healthcare related revenues, we've seen about a 25% growth rate in each of the last 2 years. Importantly, this growth came not only from new client acquisition, but also growth within our existing client base, taking it from that $5.8 million in 2019 to $8.8 million last year. Let's talk a little bit about the current valuation of the company. When you look at a similar services-based companies, a conservative valuation metric would be 2 to 3 times forward-looking revenues. Now, we're not providing that sort of guidance this time, but if you look at our trailing revenues from 2021, you'll see a huge discrepancy in our valuation compared to similar companies. At a recent share price of, say, 17 cents, and with roughly 46 million shares outstanding, that results in a market cap of $7.7 million, which is far less than the 1 times revenue. When we use the metric of 3 times revenue, our $10 million trailing revenues, then our value should be somewhere in the neighborhood of $30 million. This equates to a stock price of about 66 cents a share. We consider the 3x revenue approach conservative, as it's a creative agency reference point and doesn't factor in the additional values of our high margin moderation annuity revenue streams and the value and upside of our technology. Our goal is to bring the actual valuation in line by continuing to deliver unique value to our clients, growing our revenues, and now communicating our story to the investment market. Let's take a look at sort of the public markets path for this company. A few years ago, we made a conscious decision to focus on the healthcare and to expand into a full services medical agency. Before coming back to the investment community, we wanted to demonstrate the value of those decisions and that we can grow the revenue and be profitable. Now that we've done that, we are stepping up our investor communications. We're looking to engage in the investment community here in the end of 2022 and build this as we reintroduce the company in 2023. When the time's right, we'll look to move up to the OTC with full SEC compliance, but we'll continue to grow our current market segments and add new ones. And we also consider growth through acquisition. So let me give you sort of the investment highlights. We've got a strong client base, primarily Fortune 100. We've got long-term relationships, some lasting as long as 14 years. We've got a proven business model. This goes back to our creative and strategic services, our moderation engagement, and our technology platform. We've got a track record of growth and profits. Over the last 10 quarters, we've improved our revenues, improved our profits, and our cash from operations. And we've got a great opportunity when it comes to growth. The healthcare market is huge and expanding. And primarily, our revenues are recurring revenues. We've got these annuity streams that add up to approximately 72% of our total revenues for this past year. And we have a strong balance sheet. We have over $3 million in cash and 0 debt.
We'd like to thank you for your time and taking the time to hear our story. And we hope you learn more about LiveWorld, our business, and how we differentiate ourselves in the marketplace and the opportunity. And now we can take questions.
All right. Well, thank you both for your presentation here today. We really do appreciate it. So my first question is, and you outlined, your services and how everything works together. I'd love to hear an example of how your solution set is implemented with one of your clients.
Well,
maybe for one campaign, not, total. Correct.
Well, we'll take AbbVie. Okay, we began with them several different years ago. They wanted to create a center of excellence in social media, which is a good way for corporations to go. So we worked with those people and began moderating some social media pages for some brands. And then that spread across the entire company, where depending on the program, it's a few hours a day or it's 24/7. They have a wonderful program called Complete, where they engage people in social media and then escalate them for financial counseling or specialty pharma, or to nurses, not for treatment, but for instructions on using the products. And that is a combination of social media pages and messaging. And then on the basis of that, we were able to introduce our creative agency capabilities and picked up some different brands to be their social media agency. For example, Synthroid, where we've developed campaigns for them related to that drug, which is off patent, which creates, different challenges, but it has its unique advantages for customers. And we not only moderate their pages and use our technology, but we do the creative strategy and execute and implement their marketing campaigns on social media.
Very good. Speaking of I'm curious to know, I mean, from what you can tell us, of course, is the company's secret sauce, right? Peter, I know you mentioned you got over 36 years in digital marketing space as well. Love to know the secret sauce that, why these companies keep coming back or keep re-upping with you to making sure that their messages are being communicated in the way that they're hoping.
All right. Well, in a few words, the secret sauce is that we understand the emotions of people that build relationships. And we know that because of our all the way back to the beginning of social media, which at its core is conversations that build relationships. And because of that, we approach the marketing by looking, we get a deal, even when we're pitching a deal, when we have it, we go and look at what are these customers really about? What are they feeling? Not what the brand thinks, what do the customers think? And how do we reveal that by understanding their conversations? And how can we stimulate and then moderate and manage, very important part of it, those conversations to leverage the emotions of those people, to change their behavior to meet the business objectives, which usually we want to sell something. But you got to change people's behavior. Now that may be patient awareness, because the biggest gap in healthcare is patients and the doctors don't know everything about the disease. Or it could be working with doctors to get them out of the inertia of the way they're doing treatment now to do it new. There's a lot of emotion wrapped up in that. And just broadcasting messages out, even in social media, doesn't do it. I mean, it's got its role, but it doesn't do it. So the big thing that's different about us is we can understand the language of emotions and the feeling of that. How does that affect behavior? And how does that affect business objectives? And then we do it from strategy to creative, and then we action it in the moderation and support it with the technology. I don't know anybody else who can do that formula.
So another question I have, and it's related to the slide where you're talking about how, obviously healthcare companies have to stay within compliance, what they cannot say. So can you expand a little bit more on how LiveWorld is helping these companies make sure they're getting the messages that they want to get out there, but it's also within compliance?
Well, it's a good question, because sometimes we say to a mom, you can be proactive and emotional and exciting and yet be compliant. Well, the foundation of that's the moderation. You have to have a system and a process, which is both people and technology, to manage and watch the comments. So if something goes out of compliance, you address it, which is this escalation. And it's both people and technology. It can't be just one or the other. Technology helps you scale the people, but it can't replace the people for a variety of reasons, including the fact that the best AI technology doesn't do it enough. And second, human beings want to be cared for by people. So that's the foundation. Then the second thing is when we're working strategy and creative, we have a lot of expertise in that, which comes down to, how do you get reference points in a short Twitter statement to meet the black box requirements of the Food and Drug Administration to do it? And there's an entire language of healthcare and compliance that we know. And we have strategists who know it, we have creatives who know it, and we have moderators who know it. And so from beginning to end, we do that. In fact, we have some clients where part of our work is creating a playbook for their corporation, for the entire corporation, on how to live in compliance in the social media world with efficiency and scale, and yet still, be able to tailor it to each individual product. And we develop these little books. I mean, they're electronic and they're on paper. That could be 100 pages long for a corporation. Deals with every social media channel, all the different ways you have to do it, all tailored to that client, because that lets them operate a much more efficiently and focus on the value they want to bring, and we help them with the message.
Absolutely. All right. So my final question for you both here today, from what you can tell us, looking ahead at 2023, what would you say are some of the company's value catalysts that you want folks to really pay attention to?
What I would say is first and foremost would be the top line revenue growth for the company. And as part of that, I would also say the growth of healthcare revenue, as well as, maintaining that annuity stream. After that, I would say maintaining our profits, and then maintaining a healthy balance sheet.
Very good. Well, the quick follow-up, I mean, what are some of the growth drivers that will result in, more top line revenue growth? I mean, do you have a steady sales stream, backlog? Is it all just coming in organically? Or are you selling within even more within the current customer base? Love to get a little more there.
Well, we have sales plans and we have targets, so we have pipeline and we have discussions with the current clients. Our model is we're going out, we're trying to add, create value for clients, get a new client. Now, some years we might get a few, some years we might just get one, but we get them and then we build these annuities. The majority of our growth in any year tends to be the current clients getting bigger. So the model here is just keep adding a client and put them into this annuity growing model. So it's important to keep getting new clients, but whether we get one or we get five or we get more, what's more important is what do we do with them and how does that start building that annuity stream year to year to year? Then generally, when you look at the market, we're always focusing on the value first to the customers, and second, creating a great, value environment for our team to attract and retain and motivate them. You really got to do that. But the challenge for us is not the size of the market. It's there. It's not even the value we create, because we create a lot of value. It's cutting through all the noise in the market. This client challenge of all our competitors. So they know about you and you get the meeting you need. And what we're doing with that is we're constantly evolving our sales and marketing, trying different things, see what works and doesn't, targeting, how do we target better? And then now we're working a lot of kind of multi-touch, multi-channel sales and marketing, to address that. And then adding new solutions. For example, we have a very unique take on influencer marketing, and in the social media age, it's very different. And it's very different from like all these big giant names and all that, and how we do that in a unique way. And then which market segments. So healthcare is really big. There's lots of parts of it. We're really big in pharma on the drug side. There's also the medical device side, and we have a toehold in that. And then some other different segments that we can do over time.
Absolutely. All right. Well, Peter, David, we're there. Thank you so much for your presentation today and answering my questions. For everyone watching, thank you for participating and listening in, watching, and enjoy the rest of the event. Thank you, Peter. Thank you, David.
Thank you.